Welcome to Share Talk, the only podcast where investors come first.
Today we have Paul Johnson, who is non-executive director at Thor Mining. I say was, as he stepped down from the role on Friday when the RNS was released. Afternoon, Paul.
Good afternoon.
Do you think you can elaborate a bit more on your decision to step down and the rationale behind that?
Yeah, of course. I originally got involved with Thor in 2016. The company didn't have a great deal of cash and was just trying to survive that perniciously bad downturn that had been in place since 2010-11. We put some extra cash into the company through Metal Tiger, if you recall, in 2016, and in September I went on the board. And I've been working with that board now for nearly 2 years, very, very closely. They are a superb team of people. They've got 3 major projects now that they've decided to focus on: tungsten copper in North America, tungsten moly in Australia, in the Northern Territory, and they've got Kapunda copper in South Australia, not too far away from their office. And they've moved to a point now, not that I'm an absolute specialist in this area, but I think they moved to a point with regard to those projects and the impending technical studies in relation to those projects and various other things, where I felt entirely comfortable that this company was on the right pathway, that my skills and capabilities, if there are any, were not really needed in the business. It's standing on its own 2 feet. It's very well financed at the moment. So all of the concerns that investors have about financing are not there anymore. It's robustly financed with a great trio of projects and a great team pushing everything forward at pace. I'm hugely excited about the coming weeks and months. And as that company delivers to market the findings from its technical work, and it talks about its projects in more detail, and people start to see what they've got there, I think it's going to be a great time. So there's never a fantastic time in the market size for directors to step down, but in this case, it was the perfect time to do it. So I'm happy to leave, as it were. Whilst also saddened, because even though they don't really need me anymore, they are a great bunch to work with, and they are the most committed and dedicated group in any public company I think I've come across.
Yeah, I think it's, for shareholders, it's a great position when you can actually be involved with the company and help it to yourself to actually get to where you want it to be. Speaking as a shareholder, you've still got your holding in Thor.
Oh, well, now there's the thing. Yes, because according to certain of the discussion boards over the weekend, I've apparently already sold them, or I'm intending to sell them. Well, that's quite interesting, because I hold exactly as declared to market, which is the requirement of a director. You can't buy or sell without declaration to market. That will be confirmed shortly, and I can tell you right now, as an investor only, my intention isn't selling Thor shares. My intention is buying Thor shares without a shadow of a doubt. And that will be very, very apparent in due course. The challenge, of course, when you're a director, is that you are incredibly restricted on buying and selling stock. And it's one of the weaknesses, really, of many financial markets, that when something is horrendously cheap, and I think Thor is horrendously cheap now, quite frankly, then you're not able to step in and make a public statement by buying the shares if you're in possession of price-sensitive information. And also, you're not, when the share price dramatically increases as a result of the work that you do and the positive development of the business, you're unable to sell some of those shares because it's not the done thing in the market. So it's easier if you're outside the business from an investment perspective, of course. I see a lot of requests for directors to buy stock in their own businesses, and I do understand that. But it's really a tricky thing for people that when you put money in as a director, that money is in lockdown for an extended period of time, and you don't have the same flexibility as general investors. But yeah, long answer to your question, I hold exactly what I held before. I have absolutely no intention of selling any shares at this time. I think the price is very low. My intention is to buy further stock on the market.
Great, and you can do that without any the restrictions that you've had previously. Out of interest, what are you invested in at the moment besides Thor?
Oh, well, a whole variety of different things. I suppose that when I pop my head above the parapet and go notifiable in a stock, then people can see some of the holdings that we have as a family group. I'm particularly enthused at the moment about, apart from Thor, of course, the gold stocks. We're seeing a resurgence in gold stocks. Greatland Gold has had some very good news recently and has pushed ahead quite dramatically in share price. It quadrupled at one point in a very short space of time recently, and it's still about 3 times higher than it was a month or so ago, which is fabulous. I'm a great fan of Rockfire, which used to be called Papua Mining, but as it's now focused on Australian gold copper projects, they changed the name to Rockfire with the ticker ROCK. So I've got a significant position and been heavily increasing in Rockfire recently. They are possibly a follow-through stock to the Greatland story. They have large-scale projects in super safe Australia, in Queensland, in the northeast. Some of the data they've been releasing has been fabulous in the last few months, and their share price has started to react now, but for a long period of time it didn't react at all. In fact, it fell. ECR Minerals has long been an interesting company for me, because I actually started on my first ever board position was with ECR back in 2012. Came off the board, I think, in 15. Recently, its market value collapsed and ridiculous undervaluation from my perspective. A gold focus share on AIM with a full AIM listing should not have fallen to where it did. And it's now starting to show some signs of life and starting to rise. So I think that one has great potential. I like the strategic metals as well. I'm quite interested in Regency Mines, as people probably know, because I'm a decent notifiable holder there. Their focus on coal is quite dramatic at this stage in the economic cycle, and with the likely demands from China placing pressure on the coal price. They haven't yet really articulated what their coal model will be, but knowing Andrew Bell, he'll have something interesting to release in due course. Metal Tiger's always a favourite. That was my probably my main AIM role over the last few years, and that's galloping ahead with Botswana copper. Copper itself, the electric metal, as it were, is going to be in great demand over the next few decades, and they're perfectly positioned to take that forward. Share price has increased from a couple of pence to give or take 3 pence. Mr. McNeil is doing a grand job, and despite the fact he's a lot younger than me, which is very distressing. Skipping back to gold, Irish gold stocks I think are hugely interesting. Conroy Gold and Natural Resources, CJNR, Connemara Mining, both perfectly positioned. In one case with CJNR, a substantial JORC compliant resource. In the case of Connemara, no resource in gold, but certainly a resource in zinc. And both of those metals, gold and zinc, I think have a great forward dynamic. So I'm trying to spread myself really around and about across different companies. In the natural resource space, I am heavily invested in natural resources, which means that part of my life I spend as a pauper with absolutely no money, and part of it I spend with the enormous gains. The funny thing is, we've done reasonably well in the last few years from a family investment point of view. I suppose our portfolio is up, give or take, 20 times in the last 3 or so years. And that's because of the focus on natural resource, small cap junior investing opportunities, where when you get it right, the prices leap. But I tend to find that when I buy shares at lows, then I'm lambasted with comments about how stupid I am. And then when the share price goes up 10 times, then I'm a greedy, manipulative piece of work who's probably just got lucky and taking everyone for a ride. But my biggest problem is that I tend to sell things slightly too early.
There's no problem with that.
Well, it's good for me because it's good karma that you always leave something for the next man, as it were. I think the saying is, and that's not a bad place to be. But no, I think we're sat now with tremendous opportunity in the market. There is another twist to all of this, and this is something that people generally don't like to talk about, don't understand, don't believe could be possible. But our markets are not as straight as people would like to have them or believe that they are. There are lots of forces that have been in place over the last 5 or 6 years, heavily pushing prices of junior stocks down. There is still, in my view, a significant amount of price manipulation, including from parts of the London financial community that really ought to behave better, given that they are purportedly regulated. We still have inadequate visibility on financing transactions, so that there doesn't appear to be a proper check validation of who is providing finance to these small companies and how they're doing it. I think naked shorting is something that needs to be looked at very, very closely. I think recovery of short positions in placings is still something that rears its head on a regular basis. And I think we need more honesty in the London financial community. In any of the financing transactions that are undertaken, it's the easiest thing in the world for a regulator to look at the book of money that's been raised and to demand supporting information about who's been involved, how they've got to that position. So have they put fresh money in, or have they simply covered a short position in the financing? And really make sure that our community is honest. Because from my experience over the years, it's certainly more dishonest, I think, than honest, and that's a great shame. And if I'm completely wrong, which I don't think I am for 1 second, then proper validation of public company financings would give everyone the reassurance that nothing unusual is going on. But we see this time and again where companies are offered money in rather dubious circumstances at heavy discounted prices. And a lot of the directors on AIM don't have the experience or capability to understand how to work with the market to get the best terms for investors. They simply fly in, fly out, and they take what they're given. And I would like our regulators to be more precise in watching what's happening and making sure things are done properly. The downside of doing things properly is, of course, half the companies that on the smaller companies will probably fail because they won't be able to get finance very easily. And that's life, I'm afraid. But what we want in London is a strong financial community with good companies being properly funded by reasonable investors in an open, honest and transparent way. And as London has been the centre of many elements of the financial services industry for a long time, you would expect that would be in place now. And I hope it will be soon. So atop of any underlying fundamentals for companies, I think there is an interesting market dynamic on occasions. And I do wonder sometimes, you see some of the way the share prices can leap dramatically on relatively innocuous events. And you think, I wonder why that's happened. And it does raise a few eyebrows and a few questions. But no, right now, I think it's a phenomenal time for the junior resource space. Doesn't mean it won't get rocky at various points going forward, but we're in a tremendous time now. Unfortunately, I have no AIM roles, so I'm an investor purely, really, once again. I have a role on the board of Metal NRG on Next Exchange, but I feel those who have been brave enough to hold on through the difficult times of the last 5 or 6 years, and those who are brave enough now to take positions at market lows in some of these shares should be very richly rewarded in the next few years. And also the work that you do at Share Talk to get out and about and talk to the companies and try and communicate the company's message is absolutely vital.
Well, we do try our best. I mean, obviously, what are we, about 2.5, 3 years in? And yeah, it's a good model we have where we try and speak to the companies. And it was started by people who just invested in AIM ourselves and wanted to know what the news was and be able to speak to the directors instead of waiting for an AGM or anything like that. Interesting about what you were saying about, there's some change maybe with the regulations and stuff like that. I know that there was a well-known broker recently within the last 6 months. I think it was the FBI who got involved. It wasn't our own regulators really with some of the troublesome.
Yeah,
maybe
this was in relation to was it alleged securities fraud and money laundering. I mean, it's well, we've been affected by the Beaufort scenario. Lots of investors have been affected by that. It's put a lot of money in lockdown. Now they've come to a sensible arrangement, I think subject to court approval, that enables the vast majority of investors to get all of their assets out of that business, supported by the Financial Services Compensation Scheme, injecting the compensation in a manner that protects almost everyone within that business. And then that should increase traded liquidity as people get access to their assets again in September. But it is quite unconscionable that you should have a main city broker of that nature encountering that kind of regulatory problem.
Yeah.
And there needs to be a proper look at this. I've always felt that if we levied probably just a 25 pence charge on every AIM trade, buy or sell, just 25 pence, that will provide a pool for the FCA in the UK to have a dedicated unit to look at smaller companies and broking around smaller companies and make sure that regulation was being properly implemented, and also to make sure that the market makers are in line with the regulatory requirements. There have been some changes in the rules recently that prevent pretty much any financial market participants going short in stocks without seeking the proper approvals and permissions. And I suspect quite a few of the even higher end city institutions don't realise that some of the things they may have been doing in recent times they're no longer legally allowed to do. Now, that will kick in eventually, but it's quite a slow process, new regulation and new law. But what I would say to investors is you must absolutely, if you can, take certificated shares. So ask for your shares to be taken out of nominee, pay the 25 quid fee or whatever it is, and hold your share as a certificate. You can still sell those shares, and different brokers have different terms for certificated dealing, but you can still sell them. But when they're outside of the system, they can't be used for manipulation.
No, that's right. You can't short someone else's shares
Another thing which is a real issue, which people just don't know, and it's quite frightening this, but you buy a share T20, then on the T20 day you have to make the payments, and the shares should be delivered to your account. Now, let's just say you make that payment. The shares will be showing on your account from when you first did the trade. And technically speaking, the trade will be shown as settled on the T20 day. But they may not have been delivered by the market maker. And for all intents and purposes, it will look like you have those shares on the screen, but they will not actually be delivered to your account. You can still sell them and the cash will appear. But the fundamental issue here is that you have to force settlement and delivery of your stock. So if you buy reasonably chunky for you positions in stocks, whether it's standard settlement T2 or it's longer settlement T20, you get on the phone to your broker and say, I want written confirmation from you that my stock from that order has settled and the stock has been delivered by the market. Because many times the stock is not delivered. And this is how they can play the game in the city sometimes. There were a few providers in times past that used to notify if stock had not been delivered. I think HSBC for their private clients used to send you a letter and say, we've not been able to source your stock. But people should be enforcing these rights. And if you do that, if you force the market to deliver your shares by demanding delivery and putting pressure on them, they have to go and get them. And if they have to go and get them, that has a positive impact on the price. Whereas if they can just leave you in the dark thinking you've got the stock, but you haven't really got it yet, then they can play around in the background. People should certificate first and foremost, and then secondly, should get on the phone to the broker and demand confirmation that not only has the stock settled, but also it's been delivered by the market maker to your account. Protect yourself.
Yeah, it's good advice, and hopefully more people will start taking that up. As you say, otherwise you get the market makers who want to balance their books and other companies. So it's probably very good practice if you're doing a large investment in any share. I just want to leave with one last question, then, Paul. It's you're saying you're no longer in a director role or anything like that. What's the next step for you? Are you going to just sit there with a buy and sell button and different shares, or are you just going to be sit back and be like an investor?
We have a business that has a very wide array of different investments, public and private. What we actually do is significantly more extensive than just taking the positions on AIM. So there's a lot of private stuff to do at the moment, and that deserves a bit more focus than perhaps I've given it in recent times. I made a commitment to my wife that I would come off the boards eventually, and then I wouldn't take up more board positions because they are all time consuming, and they take your mind really away from family life. I certainly haven't seen much of the kids in 2018, and it's something that I feel quite bad about. But my problem though is that I keep seeing new opportunities come up, and I think something could be done with that, and the problem is that we had a camp night at school. Sounds terrible, doesn't it? Where we camp tents on the school field overnight, and I was chatting with my wife about this. Was on Friday, after the resignation notice came out, and I was chatting with my wife about this, and she said, if you really want to, you can go on other boards. I understand, and that was the worst thing she could have said. So I'm in a quandary, but I suspect. More of my focus will be on the private stuff. The public stuff is great, but it's hard work, and not so much internally with the companies, just the outside stuff. What's allowed, the criticism that directors get. It's like having a job appraisal every 30 seconds. I mean, most people, if you had your boss looking over your shoulder, and everything you did, every email you sent, you had criticism on all the time, it would do your head in. And in fairness, that's what it does, which is why directors sometimes become distracted and don't really seem to focus on their investors, because it's such a bludgeoning process. So I don't know, maybe some other opportunities will come up, but right now I just want to focus on the private stuff, and also focus on this tremendous opportunity as an investor in the natural resource space, where there are some phenomenal opportunities out there and some market valuations like Thor that I believe are utterly ridiculous and will correct in due course, and I think potentially in very short order. Keep on buying those shares, and then when they do move up very substantially, selling them, because that's what it's like at the end of the day. In our marketplace, you want to make money, you have to buy the unpopular stuff when nobody wants to buy it, and then you have to sell it when everyone's buying it.
Brilliant. Thanks, Paul. Like I say, I'm going to wish you good luck with those sort of opportunities and investments that you're going to do. But I'm sure we're going to hear from you anyway at some point again with regards to obviously advice that you give, because I think hopefully some people do listen to the things you say. AIM's a difficult one if you're going to invest in it. If you're not, if you haven't done your research, you're not wise to actually the goings on and the mechanics behind it. But thanks for your time today, Paul.
It's a pleasure, and thanks for your time.
No problem.
Speak to you soon.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.